Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. If you're new to the page, hit the like, subscribe, and notification bell in your bottom right-hand corner. If you've been rolling with me for a while, go ahead and hit the like button. You guys know I need you guys to stay alive. You know the song, staying alive, staying alive. Listen, let's talk about a big company called Apple, right? And I know you're saying, why Apple? Because everyone that has been investing is looking for the next Apple. But have you considered that maybe Apple is the new Apple? Maybe Apple can continue to grow like it has been growing in the past. Now, if you look at a chart of Apple and you zoom out, and you will literally say the number one thing that I've been asked from new investors, yeah, but is that sustainable? Well, the answer is maybe. Apple is a company that puts a lot of money into technology. Now, I know you've been hearing about the Microsofts of the world and the Googles of the worlds and the Bings, the Chat GPT chase. But Apple is the type of company that does this research in secret, all right? And then they wait for their big announcement and then they just roll it out, right? We know what Apple just did in their Q1 earnings of this year. They smashed all of the expectations. A lot of these analysts, they smashed it. They thought they were going to suffer from weak phone sales and this supply chain and margin compression and all of this. And they actually did well. As a matter of fact, Apple saved the entire market. And that alone with a lot of things that happened last week, as you guys saw, it was kind of like perfect timing, okay? So what I want you guys to do is I want you to listen to this very short clip that's some very interesting data on Apple.
This morning, Tom Forte, D.A. Davidson Managing Director, has a buy on Apple, recently raised the target to 193. Tom, I think that's about a $20 bump, and you cite a number of reasons, easing FX, EM in China, or India, I should say, financial services. Can you sort of ladder out which are the most important?
Sure. So first off, I like Warren Buffett's comment there. And if you look at the quarter Apple just reported, they also indicated that they're going to buy back 90 billion more shares of stock, which is what Warren's talking about. So Apple's basically saying, hey, investors, if you're not going to buy our stock, and hey, Warren Buffett, if you're not going to buy our stock, we're going to buy our stock. So if you look at the March quarter, it was better than expected iPhone sales on the reopening of China that drove the results. And you are seeing improvement in FX. What was a 10 percentage point headwind went down to a 5 percentage point headwind and is now expected to be 4 points in the June quarter. But really, it was the strength of the iPhone on a reopening China that drove the stock's performance.
Do you see them, we had this discussion this morning, moving into parts of the world where just the average selling price has largely made it an Android part of the planet, where they can actually go on offense in countries where an Apple iPhone has been too expensive historically?
I think that that's an opportunity and a challenge. So if you look at India and you compare India against China, they have a tremendous playbook for China, which is about 10 percentage points of their sales. So 10% of their sales come from Chinese consumers, and their supply chain is heavily dependent on China. So perhaps in a decade, India could be 5 to 10% of revenue and a greater portion of their supply chain being handled in India.
So you see, to my point, the iPhone or Apple has a tremendous market, right? Being India. And so why India? Let's take a look. Here's why India. If you look right now, this is a total population by country. It's the most current, okay? You can see 2023 live. India now has more people in it than China does. India just became the biggest country population-wise in the world. Now second by China. China was all of 2022. China was the number one country, all right, as far as population for many, 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 many years. Okay, India just flipped them. And now you see the market share that's available. Over $1.4 billion with a B. And so look at the market share. And then also think about AI, artificial intelligence. And you really haven't heard anything boisterous from Apple as far as the AI, but you know they use artificial intelligence. And that is something that we have to keep an eye on. Now, for those of you that don't know that are younger, Warren Buffett is one of the most famous traders in the world, in the history of the market, and one of the most successful. Let's hear what Warren Buffett and Charlie Munger has to say about Apple. Okay, let's try this.
And, the good thing about Apple is that we can go up. They buy in their stock, and instead of owning 5.6%, they got about 15 billion, 700 and some million shares outstanding. They get down to 15.25 billion without us doing anything. We got 6%. So we can't own more than 100% of the BNSF. We can't own more than 100% of Garanimals or See's Candy. And it'd be nice. We'd love to own 200%, but that just isn't doable. But they're all the same. They're good businesses. And to think that our criteria for Apple is different than the other businesses we own. It just happens to be a better business than any we own. And we put a fair amount of money in it, but we haven't got more money in it than we've got in the railroad. And Apple is a better business. Our railroad is a very good business, but it's not remotely as good as Apple's business. Apple, has a position with consumers where they're paying, maybe they pay $1,500 or whatever it may be for a phone, and these same people pay $35,000 for having a second car. And if they had to give up a second car or give up their iPhone, they'd give up their second car. I mean, it's an extraordinary problem.
You guys heard that? They would give up their home before they gave up their iPhone. And that is the truth. And what he says is true. He literally said Apple is a better business than any business we own. This is from one of the well-known or best investors. And, he's been in it a long time. He's in his 90s. He is almost 100 years old, Warren Buffett. Charlie's like 399 years old. He's always eating, so I'm just joking. These guys are, I hope and pray that when I get that age, my mind is that sharp if I live to be so lucky to live that long. I also wanted to show you guys, people were asking this morning what was happening with crypto. And I just wanted to show you guys exactly what was happening with crypto right quick. This is one of the things why crypto fell. Binance lifts block on Bitcoin withdrawals amid heavy volume. Okay, and so that's why. So people can withdraw their Bitcoin, causing it to go down. And as you guys know that watch me this morning, whenever that happens, for me personally, anything I say is not a suggestion for you to buy, hold, or sell. I take opportunities like these when Bitcoin is in the 27 and going lower, if it goes lower. I take opportunities like that to actually buy. I buy when people are selling, and I sell when people are buying. Now let's talk about Tesla real briefly. I want you guys to look at this video, really short video, and we'll discuss it after that, okay?
Tesla has that others don't is the ability to experiment with things like pricing, and you're seeing that now. And that's a way to capture market share at a time when many people are afraid to buy new cars because they've become so expensive. So you've got a perfect storm in autos like a lot of other industries where you've got high inflation, you've got recessionary concerns, you've got the move to EV, which can provide even more costs and embed more costs, and you've got supply chain challenges. So
Right.
all of those kind of wrapped together, and Tesla's in good shape.
It's fascinating that basically your analysis suggests Tesla's price cuts come from a position of strength and not desperation, and that's obviously been, an argument point in the market.
Okay, he goes on, I'll spare you that. He goes on to say that Tesla is a better run company than any auto company, including the legacy companies, GM and Ford, actually. He gives it a higher rating. And he, like he said, they could play with these price compressions that they've done. They can play with pricing and try to see what works for them. Of course, you know what happened when they did that. The stock fell a little bit, but they have cash and they have time to get it right. And so they're trying to flood the market, okay? But just remember, like I said before, whenever you do that and you have price compression, when you have margin compression, meaning you're making less money, then you have to make it up somewhere else, right? So that means that you got to get your material cheaper or your labor cheaper. It has to balance out. So now let's take a look at both of these companies. And as you could see right now, they're both pretty flat. One, as you could see, they're both pretty flat, right? But over the last month, look at what happens over the last month. We see Apple is up about 7%. Tesla's down about 7%. But let's look at year to date. Let's look at that. As we could see, this is the 5th month. We could literally see that Tesla is up 58% and Apple is up 38%. And if we go over 5 years, you'll see that Tesla has been on an absolute heater, and so has Apple. Now, let me take Tesla out of here, and let's just go to Apple, right? Let's remove this. Let's just go to Apple. Here's what most people want to know. Is this still doable? Look at this. From 2005, when Apple really started to take off, is this still doable? Is there a company, any company out there, you guys see the percentage, that could even grow, let's go to COVID, all right, could grow by this much? Look at this. Look at this. That is insane. What is that, 11,233%? That's insane. So that is the question that everyone wants to know. It may or may not be able to grow at that rate, but don't count it out right now just because they've run this much in the past. Both of these companies will be profitable. Now, let me end by saying this. I think that both companies are frothy short term, right? That doesn't mean that they won't continue to grow this year. As you can see, year to date, they're both killing it. But I believe they're both, if you believe that there is a harder recession coming, right? A deeper recession coming. I personally believe we're in a rolling recession. But if you believe that there's another major leg down and there's a deeper recession coming, then it's not going to be a straight line up. It may dip down. But long term, I believe that both of these companies will be something that is generational, meaning you can invest in these for an entire generation and pass them down to the next generation. All right, good people? That's what I wanted to discuss today. Hey, just remember that today is Moo Moo Monday. Just remember that if you download the second link below and just deposit $100, you're going to get 10 free stock worth up to thousands of dollars per stock. And if you get a bigger deposit amount, you can get up to 20 free stock, the 15 plus the 5. And then lastly, but just as important, Stock Up You. If you want to learn all of this stuff, if you want to learn the market better, go ahead, download it, and let all of us teach you about the market so you can be a better investor and you can make more money. More money, more money, more money. Hey, this is Paisley Week. This will be, I'm going to wear a Paisley shirt every day this week. Let me know what you think about Tesla and Apple long term. These are not swing trades. For me, these are long-term investments. Leave me a comment. We'll see you later.